Welcome back to another weekly market and financial update. So last week we talked about the Fed having their committee meeting, and we weren't really sure which way they were going to go because a lot of news headlines have said, well, there's a lot of stagflation, inflation, right? Interest rates really haven't changed much. And the good news is that, Fed Chair Jerome Powell came out and said, the headlines say one thing, but we really don't see that stagflation that a lot of the news media is talking about. However, they are still in a position where they are likely to hold rates for a continued period of time. A lot of analyst estimates are thinking maybe there will be a rate cut sometime in September or in the fall time later this year. So we're in the second longest rate pause in modern market history, sitting at about 280 days where the Fed has not reduced rates. Second only back to 2006, 2007 when they didn't lower rates for 446 days. So, Ben, you're throwing a lot of numbers at me. So what does this actually mean, right? Well, what it means is that in today's modern era, everyone has access to technology, right? Everybody has a phone, everybody has a computer pretty much, and we all have access to the same information. And it can be very easy to get caught up in the media headlines and make emotional decisions, right? Looking back at history and in terms of how the market has actually performed on average through Fed rate pauses since really the 1980s, on average, the market is actually up about 13.1%. And a lot of folks might say, wow, that's actually a pretty good rate of return. And you're right, it is. And that's because the market tends to do well outside of certain factors that the media influences, right? Over the long term, the market will perform well. In the short term, it may not perform as well. I mean, think 20, 30 years ago when we didn't have access to the level of technology we do today, right? Most folks got their market news maybe from the newspaper. If you remember waking up in the morning, getting the paper, mom or dad might bring it in, or you might bring it in yourself. You read it, and that news was already from the market close of the day before, right? So that data was already well out of date from a market perspective. Whereas now, I mean, we can get information almost immediately, right? So market swings throughout the day are much more frequent. They're much more volatile, even on a weekly basis, right? Markets might change. We might open the market one day and within the first hour, the market's down 3%, maybe down 2%. By the end of the day, it's up 1% or 2%, right? With all sorts of fluctuations throughout the day. So all this means is that inflation has been an ongoing issue. Media headlines, I think, is also an ongoing issue because it makes investors very, very quick to react on an emotional level versus taking the time to sit back, process the information, and say, okay, does this data actually apply to my plan over the long term? And should I be making a decision off of this information, right? And most often, more than not, you should not be making a decision based off of day-to-day information, right? You're making decisions based off of the end goal, whether it's retirement, saving for a child's future college education, saving for a family vacation, saving for whatever is most important to you. And that's really what I want everyone to take away with this week because, again, information is very, very readily available. And if you're having a hard time digesting everything or information is too much and it's overwhelming, please sit down with your financial planner. Give us a call. We're here as a resource to help, to be there for you, and to help guide you through life's difficult decisions and the emotional journey that comes with making investments. So thank you so much for tuning in this week, and I look forward to seeing everyone next week for another update. Stay safe, stay healthy, take care.